All right, everybody, we're back with another episode of the Wealth for the Culture podcast. Today, I have a tax expert on, and I know a lot of people have been waiting on this episode. Do have a few questions that people have been asking about as far as taxes, and I'm not the one to ask, so I figured let me go find somebody that can help them out. And her name is Courtney Matthews. So, Courtney, if you could, please just give everybody a little brief intro about yourself and your background.
Okay, well, hello. First, I want to thank you for having me um, on the podcast to be able to share knowledge. Like you said, my name is Courtney Matthews. I am a tax accountant. I've been in the tax industry for 13 years now. 6 of those years have been with my own tax firm called MCore Tax and Accounting. And I focus on entrepreneurs and small business owners. This year, I'm getting into mid-sized businesses, but I focus on establishing an accounting structure. A lot of entrepreneurs are like, you know, they run the show themselves, and taxes and accounting, unfortunately, take a back seat, which is, crazy to me because in my world, that's the foundation. Um, you're only as good a business as you know your numbers. If you don't know your numbers, you don't really know how good you're actually doing. So we really focus on educating first and foremost, but actually establishing the accounting structure and educating business owners to not only know the importance of that, but also know how to, look for certain things as far as, taxes go. So even if they're not running it themselves, they're capable of, knowing what's going on because knowledge is key. So yeah, that's what we do.
Okay. And if you don't mind, like, how did you get did you go to school for this, or how did you get into taxes?
Yeah, so I guess probably a combination. I kind of went into accounting in high school. We had to choose an elective, and accounting was one of them. And I was already like good at math. Like I was one of those kids that, like, math was just easy for me. Like, you know. So when it was either accounting or like a computer class, and so I chose accounting. That was my junior year, and then they ended up offering accounting too my senior year, and I was so good at it, and I liked it, so I took accounting too. And so by the time it was time for college, I just kind of knew my major. Everybody else was like, I don't know what I'm a major in. I'm gonna just do
Wow.
general studies. I was like, no, I knew that I was gonna major in accounting. Um, but when I got into taxes, my mom was actually working for an accounting firm in my hometown, and I needed a job because I had moved back home. Actually, I had gotten pregnant and moved back home, and so I needed a job. And so my mom said, well, I can put in a good word for you. She was a receptionist. So I actually started as a receptionist at this accounting firm and kind of was, seeing what they were doing. They were specialized in taxes. That was like his busy season. And the owner was a CPA, and he liked me, and he knew I was in school for accounting, and just kind of went from there. I started doing taxes. Well, I started as a receptionist. The next year I was taking the class to do taxes, and I stuck with it ever since.
Well, that's dope. That's crazy because a lot of times that like it was even offered at your high school. That's big because I know we didn't have that option. I mean, we had like a business class that I took, but it was no. I mean, I like math and stuff. It was no like, oh, here's an accounting course you can go take. So that's pretty interesting. That's pretty cool because I know a lot of people don't even have that ability to take advantage of something like that. And it's kind of cool that you just knew what you want to do. I mean, I get it though with the whole like good with numbers things. Like I like that. Like I was kind of the same way, but then I feel like I got so sidetracked with that stuff with football and stuff. So I get it though. Like that's pretty dope though.
Yeah.
So I mean, can you just kind of go over the like the basics of like what are taxes and like how does the tax system I guess work like here in the U.S. And we kind of branch off from there.
So taxes is, I think I think it's pretty easy to understand the basics of taxes. But it's funny because we know all countries don't have income taxes. But the United States actually didn't always have income taxes either. It was actually introduced as a way to take from the rich and give to the poor. But the people who were voting on this new tax thing were the poor people. So when, when they introduced it that way, of course, the poor people are going to be like, yes, let's do that. When I say rich and poor, we all know that there's, classes in this country. So I'm not saying it negatively, but so yeah, and then it kind of turned into what we have now is totally different. It seems like the poor and middle class are being taxed higher, and the rich people who can afford to get through. I mean, we saw Jeff Bezos didn't pay anything in taxes, So it almost seems like it's flipped, and it almost seems like we've been, I guess, duped, quote unquote. But the difference is knowledge. The rich people who own these big businesses, own these corporations, they have the knowledge and they have the resources to be able to pay these lawyers and tax accountants to be able to, I guess, quote unquote, get through the loopholes or whatever, instead of just complaining about, oh, we have to pay these taxes, So I always tell people education is key. The more you know about the tax code, the more you know about taxes, the better you're equipped to be able to maneuver your business. And so the first thing that I tell my clients is understanding your advantage, and how you set up your business. So a lot of people fail to go and get their LLC. And so LLC is good, but it's a state recognized entity. The IRS doesn't even recognize an LLC. It's called a disregarded entity. And so LLC is good for protection, for your business. But in the eyes of the IRS, you're a sole proprietorship. It's no difference between a sole prop and an LLC in the eyes of the IRS. So I tell people, if you want the highest level of protection and the most out of, income taxes and deductions, then incorporate your business, make it a corporation, because that is what the government recognizes as a business. So that's probably the first thing that I kind of tell people, because a lot of people don't really understand the difference. Everybody is preaching, oh, go get an LLC. Yeah, that's a good thing, but there's another level, and that's the level that the big dogs are playing on. So
that's crazy, because I never even knew. Like, I mean, I understand, like, that is all you hear. Like, go get an LLC. And, like when I got my store started, I mean, I'm still setting up everything for myself, but it's like all you hear is go get an LLC, and you kind of hear people, they don't really talk about sole proprietorship too much. I mean, it's just kind of like you just naturally fall into that. I feel like it's
yeah,
never
that's
like really spoken about.
Yeah, the sole prop is the default.
And it's kind of like I didn't even. So you don't. I guess if you got an LLC, they don't like recognize that at all. I didn't know that.
Okay, so to the IRS, state government, Department of Revenue, yeah, they're going to recognize your LLC, but to the IRS, it's a disregarded entity. That is why you can file your business on your individual tax return without having separated. So when you do an LLC, you can elect to have your business taxed as a corporation, but still run your business as an LLC. So there is that advantage, and if you do it that way, then your business is recognized by the IRS, not as disregarded. So you can, on paper, be an LLC to the state, you're an LLC, but then come tax time, you can be taxed as a corporation, and it's on a form 1120, and it's totally separate from your individual tax return. Otherwise, if you don't elect to do that, then your business is on your individual tax return, and that's how you know it's. I don't want to keep saying disregarded, but that's how you know it's filed on your individual return. That it's on the Schedule C, and that's profit or loss from business income. And that's what most people will do, and that's fine, because you can still, claim your expenses, as deductions, and you can still do all the things. But as far as like the big tax breaks and credits, you kind of are missing out on some of those if you don't, file as a corporation.
Oh wow. I mean, that's good to know, because I mean, I don't know, probably plenty of people that's gonna listen didn't even know that. So I guess you say you need to know your numbers, like, so I guess that would fall in, bookkeeping and all that. Is that kind of what you handle? I guess. I mean, I'm pretty sure that's all y'all handle. I guess is bookkeeping stuff like that.
Yeah. So with bookkeeping, well, let me just back up. The difference between accounting and bookkeeping, um, it's all in the same thing, but bookkeeping is a part of the accounting cycle. So accounting encompasses other things, but bookkeeping is a big part of it because it's our daily transactions. So the money, it's all of our cash inflows and cash outflows of the business. Everything that goes on money wise in the business, that's bookkeeping. And so when I talk about knowing your numbers, it's knowing how much you made in a week, uh, in a month, in a year, how much you spent, what did you spend it on, like breaking down, categorizing your expenses, marketing, advertising, travel, gas, vehicle. If you have subcontractors, how much are you paying them? And it's keep it up with all of those things. So at any moment, you can go and look at your financial records and say, when you talk about, can I hire somebody? Is my business making money? Is this specific product making money? Is this specific service making money? Or am I losing money? Am I, do I, because you can actually be making money like in sales, but then you have so many expenses that you're actually losing money. But you don't know that if you're not paying attention to your numbers, because the sales are looking good, but if you're not tracking both sales and expenses, then you'll never know. You're just going month to month. Oh, I'm making sales, and you're advertising that you're a 6-figure business, but you got 6-figure expenses as well. So I think, yeah, that's when I talk about knowing your numbers, that's why it's important.
Yeah, I definitely think that's very key, and that's also a good thing. The way you described how you take place with y'all's business, with your business per se, is that you're willing to educate people, and you're not just collecting a payment from them and doing a service, but you're also educating them on the importance of everything going on with it. So that's to me is very key, because I mean I don't deal with people too much. I mean, when I do I got my personal taxes, and I don't really know as far as the difference between like personal and business. So I haven't really dove into it. I'm still learning every day, but I don't really go to nobody. I do my stuff. I go online and do it on what's it called TurboTax. Yeah, and then that just be it. But it's crazy because I think I saw somewhere. I mean, you could confirm this because you know about taxes. Like I guess the tax return, it really, because I honestly don't like. I remember when I first got a check, man, back when I was in high school. You see these taxes coming out, I'm like, what the heck? Like you expecting one thing to get, and then you see all this money that came out, and then next thing you know, you fast forward, you filing taxes, and you realize like they're really just giving you money back because you overpaid, and it's like, so I basically just gave the government a loan for the whole year,
Yeah.
and that money could have been in my pocket. So it's crazy. I used to think, I don't know what I thought it was. I thought like tax was like some kind of bonus or something. I don't even know.
Yeah. So I think that is one of the biggest differences in how poor and middle class view taxes and how rich people view taxes. Rich people, okay, I heard, I think it was Robert Kiyosaki in his book Rich Dad Poor Dad, and he kind of broke down the difference in how, I guess, the cycle of income taxes is. And so employees, when we work at a job, we get a W-2, we have federal withholding and state withholding. So generally we will work, um, the taxes are taken out, and then we spend what is left. But for corporations and businesses, you have to think of, you do the work, you spend the money. You do the work, that you have for your clients, or you sell the product or whatever. Then you spend, and then you pay taxes, because the goal is to not pay taxes as a business. The goal is to shell it out in, charity, shell it out in, whatever expenses that you have to have for your business. So at the end of the year, there's nothing left over to have to pay the government. You want to have it all operating your business. There's 1,000 ways to do that. If you're in real estate, there's capital gains, there's transferring it, there's dividends. There's so many ways to do that, but a lot of people don't even know. So it's at the end of the year, I'm looking for a tax return, and in reality, that's not really what it's supposed to be designed for. That is, I guess, a benefit to some people because they're looking for that tax return. But like you said, it's your money. Like, you paid it in, you earned it, you paid it in, and they're just giving it back.
That's crazy because I know it was times like, that's real, like, especially in the Black community, that's like a real hot time of the year. Like, once tax return is coming around, like, that's when you start seeing everybody flexing. And I remember I used to, like, you used to hear people be mad about, like, oh, I'm not getting as much as I thought I was getting back. And now, that a lot of people hear this and they'll be like, oh, well, wow, like, really?
Yeah, you did it right, actually.
Yeah, I'm about to say, really, as long as you don't owe anything, you should be okay. I mean, you just gonna have to maneuver a little bit differently because a lot of people they take that in almost like even myself, like it's almost like a bonus for the year. When in actuality, that's crazy. You just basically gave the government.
Money.
Yeah.
And so even with the federal withholding, this year, 2020, the W-4 form looks a little different. So if you started a new job in 2020, or if you had to change anything, you got married, got divorced, had another kid or something like that, and you had to change, like, it was previously allowances. Oh, if you remember when you got hired, when you filling out your W-4.
With the little 0 and a 1 or whatever? Is that what you're talking about?
Yeah, that form. So if anybody's listening and got a new job this year, you notice that the form looks different. So now there's no more personal allowances. You can elect to have as much or as little taken out of your check, or additional amount taken out of your check. And they did that to kind of cut down on underpaying or overpaying in withholding. So at tax time, you don't have, this huge refund or not getting or owing. So I think the government is trying to do these little subtle things to not have to pay all these refunds. But anyway, I say that to say, like, you have control over what's coming in and out of your check. Well, like, out of your check and withholding. And so a lot of people, like, around this time, it's the holiday time, they will decrease the amount of withholding that's coming out, so they'll see more money on their check. And I think that's a tactic that I've seen a lot, because if you have less money coming out in withholding, then you have more money, paid into your bank account. Well, adversely, if you have less money coming out of your withholding, then you have, more money coming out of your withholding, you have less money on your account. That's why people with, they're single, those are the people that typically don't get the most refund, because they don't have a kid as a deduction, and they don't have. But if you understand how it works, then you're able to, I don't want to say manipulate, but you're able to get more money out of your check throughout the year, but knowing that you won't have this big refund. It's that's kind of
you playing the game, basically.
Yeah, that's kind of how it works, but a lot of people don't really understand.
Man, this got me itching. Well, God, that's crazy. I didn't even know you could do what you just mentioned right now. I'm still trying to wrap my head around it.
Yeah, anytime you can go to your HR, or I know most companies are online now, but at any time you can go and change the amount of withholding that is coming in or out of your check, to be able to see more on your check or to see less on your check. Just understand that that's how the income tax refund will work.
So, okay. Yeah. Wow. I just learned something today. I know that. Golly. So I guess now you shifted over from just personal, and as far as like the business setup goes, I guess what all the people need to take into account. I know you briefly spoke on like a bunch of things, like if they can have employees, like does that I guess does that tax situation look different? We'll talk about like, okay, you got a business, and you have like you might have a business where you have employees that you have working for you, but then you have the
Mm.
sole prop where it's just you kind of make everything work. Like, how does that? I mean, does that tax break it down? I guess I would assume it breaks down differently because you're paying out employees money and stuff like that. So
Well, it depends on how you hire people. So if you hire them as an employee, like actual payroll taxes, you're paying half of their Medicaid and FUCA taxes and Social Security stuff like that. Then that's different. You as the owner, the business owner, you would have to pay payroll taxes because you're responsible for that employee's your portion of that employee's Medicare, Social Security, and stuff like that. So you're on the hook for payroll taxes with that. And then I guess as far as bookkeeping or recording goes, you'll have to, at the end of the year, you'll have to send out their W-2, just like any business. You have to send out their W-2s. They have to report it as income, but you also have to report it as an expense on your return. And then on the other hand, if you choose to go with subcontractors or independent contractor work or contract labor, there's no taxes being taken out of their check, so you don't have to pay payroll taxes for them. All you have to do is pay them for the work that they do and record it. Make sure you record it so you know how much you pay each person. And then at the end of the year, you'll have to send out a 1099 for them for it's called non-employee compensation. And so same thing, they have to report it as income and you have to report it as an expense. It's just contract labor expense instead of the employee and payroll expense that you would have as an employee. So that it's pretty much record keeping. You want to always keep up with how much you're paying people because you never want a dispute to say they didn't pay me, but on our books we paid you. You never got any 1099. It's all record keeping really. And then you get into the HR and the legal side, and depending on what business you're in, if you want to have insurance for these people, if they're doing labor, if they're at risk or something, then you get into that side. But on the bookkeeping and tax side, you just want to make sure you're keeping up with what you're paying people.
okay, so I guess since we talk about paying people, like for those people out there, like how do you talk about paying yourself? Because I mean you have a business, so like how does somebody kind of determine how much how much do you pay yourself, or like when do you even start? Because I know a lot of times you start a business, most times you're starting off in the hole because a lot of people they funding their own stuff, they're not even thinking about going and getting.
Oh, that's actually a common question with entrepreneurs, small business owners is how to pay myself, when to pay myself, and how much. The how much is really the numbers. Like the numbers are not gonna lie to you. If you're looking at your reports and you have this surplus at the end of the day, you have a net income, then you can determine how much you're comfortable with paying yourself a salary and putting back into the business. Then the win the win, same thing. It's the numbers. When you consistently have a net income to be able to cover an owner's salary, then that's when. But if you are struggling to even make sales every month, you don't have a client catalog that is recurring, then you can't pay yourself. But there is a way. So if you don't want to do like a monthly salary, and you just want to be able to pay your bills from here here and there. When I first started in entrepreneurship, I actually didn't start as an accountant, even though I was doing taxes. My first business, I was a makeup artist, and being in the beauty and that kind of service industry, the money was, especially starting out, it was very variable, which means 1 week you can have a good week, and then the next week you can have a bad week. A lot of entrepreneurs will kind of fall into that. in the beginning until you kind of figure out a formula. And so what I did was I did the 60-40 method. I would pay myself 40% of what I made in a week or in 2 weeks, however you want to set it up. And 60% would have to go back into the business. So I would have to buy more supplies, more makeup. I would have to pay for the little small systems that I was using, like booking systems and stuff like that. But 40% of it would go towards me and my bills, because I was full-time entrepreneurship then. So I had to, be able to pay myself something. And so that's where a lot of people kind of are. And so I get it. So if you can't commit to like a monthly owner's salary or, a weekly paycheck or whatever, then and just do it off a percentage of what is coming in. Just make sure your business can survive with you putting 60% back and not 100%. It's all going to come down to the numbers. And then as far as the how, like I just gave you one method, but whatever you do, make sure it's recorded, because you always want to be able to show owner's income and business income. And so when you talk about paying yourself, you have to think about your business is paying you, not you're paying you. Your business is paying the owner. And so I think a lot of people will have that kind of misconstrued, and the business is paying, or I'm paying me. No, the business is paying you. So your direct deposit, your check or whatever needs to be coming from the business. So it needs to be MCore Tax and Accounting is paying Courtney Matthews. It can't be Courtney Matthews is paying Courtney Matthews, because when you go to get an apartment, when you go to get a loan for a house, you have to have a verification of income from anything. It needs to be you as a person needs to be able to show income, and the business needs to be able to show income. That's where a lot of people will get messed up. It's like, oh, the business is making money. Okay, well, when it comes time for you to show how much you make, can you do it? So that's the how.
I'm glad you kind of went there, because can you kind of just break down, because I know you have, like you mentioned, you do have expenses and stuff. You do have to like talk about income and like what's being generated from a business. Can you kind of talk about keep the importance of keeping them separate? Because I know, like I mentioned, a lot of people, especially like smaller like small businesses type deal, a lot of them, they don't, not a lot of people when they first get started think about, oh, my business is one thing, and then I have my personal, what I have. So, and I know a lot of times, I guess, like, it'll just get, like, I guess, kind of get meshed together.
Yes.
And then you end up, I mean, I don't know. Like I said, I don't know how that comes, how that plays into things around when you're actually going about filing tax and stuff like that at the end of the year. But can you just talk about like the importance of that? Because I do know, I hear a lot about that is important. So I was just curious.
Yeah, for sure. I actually was on a call with a client, and we're in the process of kind of getting everything organized with his business, and that was one of the things. Okay, so let me just start here. In the eyes of the IRS, it does not matter where the money is going. It does not matter that when you get audited, the IRS is not saying, "Oh, that came from your personal account, tax fraud, throw them in jail." They're not. It's not like that for the IRS. The IRS wants to know, is the money legit? First of all, is it legal? And whatever money that you're, reporting as income, can you show proof? It doesn't matter if it's from a personal account or a business account. Can you show proof that the business made this money? The issue is a mindset. Like I said before, you have to think about your business as it's the business. It's not yours. It's the business. And you have to think of yourself as the owner of the business. And so when we start to think about it is separate, then it'll be a little bit easier to separate what the business does and what you do. Now, Additionally, it kind of comes to knowledge, and that's why I'm real big on educating my clients. It comes to knowledge. What is a business expense? What and in the separation of paying yourself. Once the business pays the owner can do whatever the owner wants to do with that money. The owner doesn't have to report back to the business and say, "Hey, I went and bought a burger from a Chick-fil-A meal." That's not how it works. The business pays the owner. The owner does whatever they want to do with that money. It's just like an employee. Like an employee doesn't have to go back and report to the company that they work for what they spent their money on. All they have to do is file their little taxes and pay a little money. Well, the business has to report what they paid the owner, but that's it. They don't have to go back and report to the owner what happened after the fact. And so when we start to get into our mind, like, yes, I own this business, I run this business, this is my baby, but on the bookkeeping side, on the back end side, on the recording side, it is separate. So what my business does, how it operates, is separate from how I move and how I operate personally. But like I said, it comes with knowing what's business and what's personal. I'll keep saying that's why I educate my clients, because I find that it's easier for me in the end if they know the difference between business and personal, where I don't have to every month and say, well, why did you put that on your business account? Or why didn't you put that on business account? They kind of know. So, yeah.
Yes, yeah, that's crazy. So, oh man, yeah, because I hear that a lot though. Like, even me, like I buy stuff like just from what I got going on, but it don't dawn on me like, oh, like it's crazy because I had somebody bring it to my attention, like I'm gonna just wait to this job. He's like, you can just put that as a business expense and you good. And then it didn't even dawn. I'm like, oh, you sure right? Like I can do that. And a lot of people I know they have that problem. Like it'll just kind of get meshed together. Like you don't realize like you got different like write-offs you can do. Like I guess from like what, like if you got a car, you can have that under the business. I
The
guess
thing
for
is,
my,
it's a lot of things. It's more things that you can write off as a business expense than personal. And it's actually probably a way to write off everything. I think if you have a good tax preparer, a good bookkeeper, accountant, then there's a way to pretty much write off everything. But
is this how Jeff Bezos got away with zero? Because I was like, man, this man the richest man out here, and he
yeah,
pays nothing.
he got a good team of accountants and lawyers to be able to say, like, kind of teeter-tottering on the line of legal and illegal. But
I think that worked perfect with like this whole tax write-off thing. I think that worked perfect with just understanding how the rich, all the wealthy people out there, how they don't pay taxes. It's crazy because you look at, we all excited about getting, like that's the difference. That's the difference, I guess, in that mentality. Like tax season come around for your regular average Joe person, like Joe Blow or whoever, and we excited about it because we looking forward to getting something back that's already really ours, and we don't even realize it. Meanwhile, you got people like Jeff Bezos, Bill Gates, and all of them, and Diddy, Jay-Z, whoever, all the people we look up to and want to be like, make money like them, and they come around and they excited because they ain't got to pay nothing,
right,
or they might have to pay $100 while we sitting here like,
right.
oh, I got 2-3 grand, I might have got 10 grand, I got a kid or something. They look like, are you excited? And they just like, nah, that's not the move.
That's not the move, because at the end of the day, if you end up getting a refund, and to them it's almost like you didn't do something right. Like it during the year you didn't do something right. You didn't spend enough money. You didn't reinvest or put it back in the stocks, or put it into an investment property or something like that. And I want to kind of touch on this too. I think that's the difference as well, is that when we calculate net worth, it's the assets that are greater than liabilities. And these people, they'll have all of this money, but it's not in their checking account. You know what I mean? They have, all these stocks and investments and, all these different things. And that kind of ties into taxes too, because I mean, you don't have it sitting in your checking account. It's wrapped up in this. So at tax time, you don't have to pay on this, a sitting asset.
Okay, I'm glad you mentioned that because um, I guess I guess another good one. I guess even if we just branch off and talk about like personal, I guess I don't even know. Maybe you could do this with a business. I don't know. Maybe you can or can. You would have to tell me. Like far as you got like retirement accounts like 401ks, Roths, like IRAs, stuff like that. Like is that? I guess that also kind of falls into like something you could sit money in. I mean, what you pay on. I mean, well, Roth you already pay, so I guess like any pre-tax type deal. I guess is that a way to help out too, or does that impact like? Is that just a personal thing, or is that for business as well?
Um, well, anybody can invest in a retirement account, but I'm glad you mentioned that, because that is one way that an employee can kind of control, taxes. Um, say what you want about a 401k, but that is a tactic that you can use. Not you specifically, but a lot of people don't really, I don't know, like 401ks anymore. But so an employee can put their money into a 401k. Like this time of year is a time big business owners are trying to see, like, okay, where am I at? Do I need to put more into a check? Do I need to donate some money? Do I need to purchase a property? Do I need to purchase a vehicle? Well, for our employees, it should be, I need to look at how much I'm contributing to my 401k. Do I need to double that at the end of the year? Do I need to increase that? Because that, I don't want to say hiding money, but
I mean,
it's not income. When we talk about taxes, it's income taxes. Well, unless you are cashing out your 401k or withdrawing from it, it's not income. So if you think about it, when you put more money in there, then you're seeing in your check the money in the 401k, you're not really reporting, not reporting, because you do have to report your contributions, but it's not taxed. So that is one way that we can kind of control, our tax bill at the end of the year.
no, I definitely get it because I was one of those people. I didn't. You couldn't tell by no 401k, and it really, honestly, I didn't even get one until just recently when I moved up. I was living in Boston, and the only reason I even got one is because of how much they take out in taxes. And then I was still getting acclimated because I'm from Texas, so we don't have no state tax. So I started seeing all this coming out in tax. Then I got a state tax. I'm like, I may as well just put this money and keep it at least myself, get the employee match, and just sit in a 401k. And that way at least they can't tax me on all of this. I got
Yep.
that already set to the side. So it's definitely something to consider if you just like, if we just take a look and step aside from just a business perspective, that's just something to consider because there's multiple ways to do it. I mean,
Yeah, it is.
and people, like I say, you don't know what you don't know is something I say often. And education is key and it's not just like I'm not talking about like school or nothing like because we don't learn like you're fortunate enough to have accounting in school, but most time we're not learning this type of stuff. They don't teach you about money in school, so now you got to go out and find somehow to like consume this type of information somewhere else. I mean, I go YouTube, Google, talking to people like you that's like subject matter experts on this particular subject of whatever you feel like you need to know. And it's just important to me, just kind of get that out there and just let people know, hey, it's other options, especially when it comes to tax, because that's something that I don't think people really think about. Like we all out here, like a lot of black people, like especially now, are starting all these businesses. You have all these black-owned businesses and the support of black-owned business going up. But what people not thinking about is the back end, and what happened when you got to come around and it's tax time and you owe all this money or whatever, and you don't spent it all, or you didn't even
Yeah.
know you might have to worry about that, and now you sitting here stuck, and you like it's just like you just put yourself in a big hole.
I'm glad you kind of touched on that. Like a lot of people will I think this was in a book I read as well. It's every time there's a tax change or change in the tax code or tax rate, percentages go up or they change some stuff. Every time there's some kind of change, we have a choice. But a lot of people just choose to complain and then just go along with it, not knowing that they have options, not knowing that there's ways around, those changes. And I think that's another difference between how, the rich think about it and how poor and middle class think about it. Sorry. And that, yeah, we all see the change, but some people are going to complain. And then some people are going to get people on the phone and say, okay, well, how will we combat this? Or what's another,
Yeah.
you know?
Oh yeah, they gonna find every loophole there is because it's always something. If that's one thing I learned from like dealing with anything business related, there's some kind of loophole in there. You just gotta have enough brains put together, just have that like tenacity to go find what it is. That's big on what you said. Like you stop complaining, stop trying to like find like that woe is me mentality, and go be proactive. Get your team
Yeah.
on the phone and figure out a way to counteract that. That's just being proactive. That's what you're supposed to be doing as a business owner, especially.
Always.
You're supposed to be finding ways, that's gonna help your bottom line. That's gonna help you from, missing out on the, in the long run.
Yep.
Now, real quick, like I do know you, like we mentioned tax write-offs. Can you just kind of break down from like a business perspective, like some common like write-offs that people might not think? Like I know, like a lot of people, I guess you got like cars and stuff like that. But can you just kind of hit on like just the common ones that people can write off that they may not have thought about, that they might have been like using their personal for when they could use the business entity as a means to get that off.
Okay. So when we talk about including your car as a write-off, okay, so there's a few different ways to do that. And every car, you can't just go purchase a car. Um, okay, well, let me just say this. So there's years of service, okay? You can only depreciate a car for a certain amount of years until, you've exhausted the deduction. That's the purchase of a vehicle. Then you can do the gas, the mileage, the gas, the maintenance, the tires, oil change. Even if you have to get your car clean, especially if you're like a real estate agent, you always driving around, everything pertaining to your car can be deducted. However, there's another deduction, is the mileage deduction, which is actually one of the biggest deductions that you can get. It's the highest percentage that will give you more of a difference on your tax bill. However, a lot of people don't realize you have to do one or the other. You can't do the expenses, or it's called car or vehicle and truck expenses. You can't do actual expenses and do mileage, because the mileage is like a standard or like a average. So that is, I think anybody, even if you're not traveling for your business, it doesn't hurt to put it on there. You still have to go to get supplies. You have to go, whatever you're doing on business hours. If you got to go get lunch, even if you're working from home, you got to go get lunch, that's deductible. Speaking of meals is deductible. If you have to go take a client to a lunch meeting, that meal is a business expense. Of course, marketing, advertising, buying software, any type of system that you pay for, your booking, your email marketing, your text marketing, your website, all of that. If you have to ever rent equipment to use, if you bought a computer or rented a computer, lights, setup, your phone bill. You conduct business on your phone, that's deductible. If you have a home offices can be tricky because you can't deduct your whole entire mortgage. It has to be the portion that is for business. It's not that difficult, but it can be done. that, but when we talk about home office, it's everything that's included: utilities, Wi-Fi, if you have an office phone, everything that's in your home office, a portion of that you have to, like I said, a portion from your home, the whole bill or
Oh,
whatever.
you can write off like the bills.
Yeah, if you have a home office, and it doesn't have to be a room with a door. Like where I'm at right now is my home office. There's no door right here, but it's a designated space that I've designated in my home to conduct business. So a portion of every bill that my house has can be deducted as business expense.
That's crazy. That's
Mhm.
yeah, that's some hacks right there. I see some maybe you could speak to this. I see something about like I guess people use their kids almost in their business as like right up. I don't know, like they pay them a salary or something. Like, can you like
Yeah,
speak on that? I don't know
that's,
how that.
I think that's definitely a hack that a lot of people are not, hip to. My son is on payroll. My son is 11 years old. He's on my payroll. He's my photographer. He takes my pictures, and I pay him about $200 a month, sometimes more. Um, but yeah, so the thing with having a kid, there is an income cap. You can't pay them more than $12,000 a year. But the reason why this is a hack, because you don't have to pay taxes on them. You know how we were talking about how you hire an employee or a subcontractor. So basically, this is contract labor. Are you still there? Okay.
Oh yeah, I'm still there. I'm just like I'm trying to process this. I'm sorry.
So
That's
basically, I'm it's not free because you still have to pay them, but you don't have to pay taxes on them. So the cap is $12,000, but it has to be your kid. It can't be your little cousin, or it has to be your kid. And yeah, that's definitely a hack. It's free labor, whatever they can do. But to take it a step further, I'm giving you some free game. But to take it a step further, um, say my son is 11 years old. By the time he is, 18 on his own and able to file his own taxes, he's been making this money. But since he can't report it on a W-2 or whatever, I start him an LLC in his name. Every year that LLC is reporting income, or tracking income or whatever. By the time he's 18, he has this LLC under his belt or whatever. And then I can then invest with his LLC. I can buy stocks. I can, whatever with that LLC. So by the time he's 18, he has a portfolio already. He has a business. He has
that's
whatever I
crazy.
purchased under that business. He has that already at 18.
Hey, you right? That's wow.
I just started that this year, though. I just started his stuff this year.
It don't even matter. You started it.
Yeah.
I didn't even know. Like until I seen, I don't know where I saw that at, but I was just like, I didn't know like the details of it. I'm glad you broke it down. That's because that's wild. Like that's dope. That's like dang, that's really how they
Yeah.
be doing it.
You
Cause
can
I,
definitely set your kids up. Like, yeah.
cause I always say like, yeah, set them up with some stuff like stocks to like just put them in position. Build their credit. Help them, don't hurt them. But when you start thinking about if you like a business owner, you basically put them on payroll. That's the same as giving them an allowance.
It is. I'm giving this boy money all the time. He asking for Roblox and all this type of stuff. I'm like, no, I'm gonna track this because I got him a little Cash App card, and Cash App whatever. I don't really like Cash App, but since it's my son, I can always see what's going in and out, and I record it every month. He has it on record, and
Now you got that whole list like that. Just eliminates that whole thing of tracking that right there off Cash App. That's crazy. And then you took it a step further. You got him you set up a whole business for him. And I guess it's almost essentially like he's a contractor per se. I would assume
yeah.
for
So
you.
on my books, it's contract labor with his
Mhm.
name, whatever. But yeah, no payroll taxes because he can't file, taxes.
And you can start that like like is it a minimum age on that?
I can't recall if it's a minimum age, but I know once they're 17, you can't. You have to pay. You have to like actually hire them.
Okay, yeah, but I mean, still, that's a long that's a long gap. That's a college fund or whatever. If you want to think about it, like that's anything to get
Yeah,
somebody started, just started in life. So
and if I
that's
had
crazy.
another kid, I would put them on there too. But I only got one.
That's crazy. And to see that, I know for a fact there's people out there that don't know that got businesses, they have kids. Like I got friends that got kids, that got business. I mean, I don't
Yeah,
know if they know all of that. So that's definitely something. Man, that's a
but
gem right
you
there.
actually have to pay them though. If you ever get audited, you actually have to show.
Oh yeah. I mean, but again, you just most parents, if they doing it right, they're gonna set something up for their kids down the road anyway. So and you done already did that because you set up the business and did all of that.
And
So
you don't really have to give it to them. Like they don't have to know that you can give them $50 and put the rest in their account. You don't have to give it to them. But if you're contributing to their savings account, or if you want to start their, college fund or whatever, I think this is better than a 529, which college savings plan. I think it's better than a 529, because they can use the money for whatever. It doesn't have to be just college.
that's gotta be that's the that's a hack for real. I
Yeah,
get it. Like I started to get it. Like I understood a little bit of how they do it when they got money like
they
that,
get it
but
now.
like when you really start talking about like all the like details and stuff, like golly.
You can already buy stocks in their name,
Yeah, isn't
from
that like a custodial account that you?
custodial.
Yeah.
Yeah, you can already do that. So yeah,
No, I just didn't know it could be like that type of like. I didn't know they could take it that far. Like that's dope.
already set up.
Now I do want to. I have a couple questions from my Facebook group that had. I'm only gonna ask you a few because I know time is money, and even on
I'm
Sun,
not in
even
the Facebook group.
I could put you in there. Honestly, I
Yeah.
oh for sure. I'll definitely get you in there because I can just direct them straight to you. If, and they can ask you all the questions that you need if you don't mind answering. But
Yeah.
yeah, I just don't be on like I get on Facebook solely at this point, kind of just for that group. So I mainly be on Instagram, as you see. So I'll definitely put you in. I'll get your information. I'll get you out of there after this.
And
It ain't much.
let me just say, you are doing your thing on Instagram. I have watched you grow from I think you had like 400 or 500 followers when I first started following you.
Yeah, I passed 1,000 finally. I didn't know what to do.
Yeah, I saw how fast, and this was only like maybe a month ago, maybe.
Yeah, like I made it, and then I didn't really know what to do with it, and then I kind of started like finding a little hack, like watching YouTube, find little hacks, and I just like try. The main thing that's hard is getting the content. Like I gotta be the most time consuming thing. You don't even realize. I'm like I'll be thinking like I really thought I was like, oh, I'll be able to make day by day. And at this point, it's to a point I gotta sit down. Like usually on Sundays I do this. I sit down and I plan out how my whole week gonna go. And kind of some random stuff pop up out of nowhere. I could just kind of make something real quick off that. But this has got to be. I didn't know it
Yeah,
was like this.
yeah, it is. It really is. And being consistent is difficult.
That's definitely a thing because it's days where I just be sitting here like I ain't no big Instagram person per se either. So for me, it ain't no natural thing just for me to be sitting on Instagram all day. But I do try to, whoever does respond, I try to like make sure I give them a response. I try to engage with everybody. Like that's my thing. Like I try to include everybody. I try to be responsible to everybody because to me that's important. And at the end of the day, that's what goes a long way. As far as I'm concerned, I like to treat people the way I would want somebody to treat me if it's like, a business or whatever entity. So it's kind of dope, but that's definitely like I didn't realize how time consuming Instagram could be, and I got a lot of respect for those out there. Like I know
Yeah,
you got like two,
it's
three,
all
what do you got?
the time.
You got a few thousand followers. It's like that's crazy. Like it's a lot of work that go into it. And I used to like even with the Instagram, like the models, like I'm in like a niche for like finance, business, all that. But even when you see like I gotta commend anybody that got like a big following and they can stay consistent
You
because
gotta
there's
stay
days
consistent. You gotta stay in their face because they will forget about you.
Oh yeah, that's real. Like, you don't even see a lot of times. Also, people don't realize you don't really know who's watching you. Like some people, they might not like you stuff, but they really paying attention. So
Yeah.
it's crazy. Like I'll get DMs about stuff now, and it's just like I never see that person like nothing. But it's like I'm shocked that they even like they really following like that, or they even like people when they first followed the page, or anything. Like I had somebody hit me up like, I remember this page had like 100 followers, now I got like I don't know like 1,100 or something like that, and it's just like at least you. And it's nice to see that you at least. It's nice to have some type of support to know that you at least doing something a little bit right. If you don't, because I was just like, I'm just going out on a limb because I made a promise to myself if I ever got back home to Texas, I just go ahead and get it done, and that happened. So I was like, I ain't got no choice, but hey, I got to be that. I want to be the change you want to see, and that's kind of important to me. Like I can't tell everybody else out here like, oh, go do it this way or do it like this, take some action. I'm sitting here not doing nothing.
Right.
But let me pull up these. There's only a few questions.
Okay.
I'll keep it brief. So I got one person. He was asking about any good tax breaks besides kids in a house. I mean, you name it.
Besides kids in a house, well, if you got a kid in college, that's a tax break. I'm kind of awaiting the new tax code changes. So not last year, the year before last was like the biggest overhaul to the tax code. There's a lot of things they kind of took out. But
Oh, speaking of, so okay, I know Biden was just elected. How is that about to impact things? Because I know a lot of people make a big deal about that major tax. But then I saw it was like only people that make over like $500,000. I don't even know how much it was. It was a lot though.
yeah, well, that is not to effect yet. So
Oh,
usually when it's not election year, they'll start rolling out the changes around like October, November. But since it's election year, we hadn't, gotten anything. So I don't expect it to be a lot of changes. There were some deductions that were supposed to be coming back this year. So one was the whole home office um, the home office expense. You can still write that off. It's just how we have to do it as a tax preparer is on a different form. There was another, way we could do it before. So I think that's supposed to be coming back. And basically, like I said, it's the same thing. It's just more of a credit. And then a lot of people don't know that you can do medical expenses, dental expenses. Like if you had to pay for like cosmetic surgery, or you had to pay for anything that the insurance didn't pay for, dental surgeries, things like that you can write that off. And then if things like braces, if you had to pay for a wheelchair, cane, anything like that, you can write those things off. The only thing about writing those things off is only going to count if it comes over a certain percentage of your income. So I think the last time, I think it was 10%. It went from like 7.5 to 10%. So say for instance, your income after you've taken all these deductions for your kids and stuff like that, and your adjusted gross income is $100,000. Those medical expenses need to be over $10,000 for you to even be able to take it.
okay.
So that's
So
why
if I got like, I'm sorry. If I got like, so if I got something like some LASIK or something like that, I could write that off.
you can, but that LASIK has to be more than 10%
Okay.
of your income for it to even count. So I can put it on there all day, and I can even charge you for me putting it on there, but it may not, make a difference. It's on a Schedule A. So if all the deductions on that Schedule A is more than 10%, then we can take all those deductions. So that's medical, dental, like I said, prescriptions. But that's also the form where your charitable donations are too. So you pay tithes, you donated to the Salvation Army and stuff like that. So a lot of people will try to make sure they add that on there, but on the federal return, if it's not coming over 10%, it's not making a difference. However, I still encourage people to add that on there because it may make a difference on your state return. because the metrics are a little different on your state return.
Yeah, I remember somebody always told me make sure you put like something in that section. So yeah, I get that.
Yeah, it's a hack.
That was like one of the first things I ever heard of when I like I ain't hear about nothing. They're like, make sure you put something in this section right here. Like I don't care. Let me go to the next question though, because so this one of the people say they own a business, they're a sole proprietor, and would like to know how much of my personal costs I can filter into it.
Personal cost. I'm assuming they mean what they paid into the business, like
Yeah, I don't get that. You know better.
to get it started up. I'm assuming that's what you mean, but like we were talking about earlier, when you start a business, a lot of this is business expenses. Even if you pay for the supplies or whatever from your personal account, it's a business expense. And so I would just say, like, you got to know what's a business tax deduction